Lime tries to avoid big bill from Trump's trade war. The scooter-sharing service Lime warned the U.S. government earlier this year of an existential threat to its business. Paying new tariffs on Chinese vehicles would require Lime either to absorb significant new costs, charge customers more, or fundamentally reshape its supply chain, the company argued in an official request for an exemption. Choosing any of these options would stunt Lime's growth and threaten the survival of its existing services. Over the last 2 years, a wave of scooter-sharing companies have emerged, based on the belief that American urbanites are hungry for alternatives to car travel. Their business models also relied on another assumption, that they'd always be able to import large numbers of low-cost vehicles from China. For the San Francisco-based Lime, the Chinese connections ran particularly deep. Brad Bao and Toby Sun, its co-founders, were both born in China, and they sold the startup to investors as a company that maintained a foot in their home country. Having two Chinese founders who had the relationships, and can set up that operation quickly, was a real advantage, said Joe Kraus, who invested in Lime in 2018 as a partner at GV, then became Lime's chief operating officer 4 months later. President Donald Trump's aggressive trade policies complicate that story. Countless American companies find themselves stuck in the middle of the competition between the US and China. Markets plummeted after the president indicated he was inclined not to make a trade deal soon, then recovered the following day on signs that a deal could come before American tariffs are set to rise on December 15. Companies have filed about 44,000 requests for tariff exemptions, and about 5,000 have been approved. The U.S. Trade Representative rejected Lime's request, along with similar ones from Bird Rides and Uber Technologies. Scooter imports from China to the U.S. this year total nearly $300 million, according to research compiled for Bloomberg by IHS Markit's Global Trade Atlas. This puts the importers on the hook for about $74 million in tariffs, a significant added expense for the money-bleeding startups that dominate the scooter industry. Lime has raised almost $800 million since its founding in 2017, and investors valued the company at $2.4 billion in its most recent funding round this February. Bao, who has been Lime's CEO since May, was more sanguine about trade issues in a recent interview than the company was in its filing earlier this year. "We are not getting unnecessarily nervous," he said, adding that Lime could be profitable as soon as next year. The company's calculations rely on improvements to the durability of its vehicles, which Lime attributes largely to its manufacturing expertise. When asked what would happen if Chinese manufacturing receded as a viable option, for more on this story, visit the news article link.